going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort, and China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Predictive data analytics, machine learning are shaping and will continue to shape many parts of our economy. And while these developments, I believe, can increase access, increase choice, and lower costs, they also raise new questions about potential conflicts, biases in the data, and yes, even systemic risk. And now for the crypto, because I know that you're all, keenly interested. We just don't have, I believe, enough investor protection in crypto finance, the issuance of these tokens, the trading, and particularly the lending. Frankly, as I've said before, I think it's more like the Wild West. I've asked the SEC staff, working with our fellow regulators, the Commodity Futures Trading Commission, the bank regulators, the Treasury as well, using our current authorities, how can we best bring investor protection to these markets? I stand willing also to work with this committee and other committees of Congress if you take up any legislative.
We hear a lot about how crypto is all about financial inclusion, a way for people who don't have a lot of money to be able to manage it or invest it. Now, the banks have done a pretty lousy job on financial inclusion, so I want to test out with you whether or not crypto is an improvement. Last Tuesday, the crypto market tanked once again. The prices of Bitcoin and Ether each fell by about 10%, while a bunch of other tokens failed by as much as a third. So in a matter of hours, $400 billion in market value disappeared. Poof, just gone. And meanwhile, several of the biggest crypto exchanges had outages, which kept customers from making withdrawals or trades. So how did that affect people who don't have a lot of money to lose? Chair Gesler, let's say that last Monday, I took out the last sliver of my savings. I went on the crypto exchange Coinbase. I bought $100 worth of Ether. Then I woke up early on Tuesday morning. I saw that the market looked like it was beginning to tank, and I thought, I better sell right now. But when I tried to sell, Coinbase, the exchange, was down. So, Chair Gesler, was there anything I could do to get my money out?
Not at a federal agency because they haven't yet registered with us, even though they have dozens of tokens that may be securities.
Yeah, okay, so that sounds pretty risky to me. But let's say that instead of buying Ether on Coinbase last Monday, I decided instead to put that $100 toward buying a cool new token, let's call it NewCoin, that was being hyped on Twitter. Now, NewCoin is available only on a quote-unquote decentralized crypto exchange. So to buy it, I had to pay a fee, about $20, to the crypto miners who process the transactions. That's $20 to buy $100 worth of tokens. But I figured that was okay because Twitter told me that NewCoin was going to make me a lot of money. But then, of course, I woke up on Tuesday morning and the market was tanking. So let's ask about this one. Chair Gesler, on Tuesday, when I wanted to sell NewCoin and get back to dollars fast, that exchange had not shut down. But remember, I had to pay $20 on Monday to get into decentralized finance. So how much would I have had to pay to get out of DeFi on Tuesday to sell my coins? Would I have had to pay a second $20 fee, or might I have had to pay even more?
I don't know, because it'd be all in the user agreement. And by the way, you put quotes around DeFi. I think that's helpful because they're really decentralized in name only. There's a user agreement. There's something you're doing with this platform. There's a governance token. There's usually some fees, but I don't know what the particular fees would be.
Well, actually, we do know some of the fees from last Tuesday. The fee to swap between two crypto tokens on the Ethereum network was more than $500. Obviously, way more than the $100 I was trying to trade in the first place. So the question I have is, in the face of these high, unpredictable fees, small investors could easily get jammed and wiped out entirely. Chair Gesler, advocates say crypto markets are all about financial inclusion, but the people who are most economically vulnerable are the ones who are most likely to have to withdraw their money the fastest when the market drops. Does this sound like the path to financial inclusion to you?
It's a highly speculative asset class. It doesn't sound like the path that you mentioned.
Yeah. There are a whole list of problems with crypto: unreliable tech, scams, devastating climate impact. But high, unpredictable fees can make crypto trading really dangerous for people who aren't rich. Regulators need to step up to address crypto's regulatory gaps and ensure that we're actually building the inclusive financial system that we need. And Chair Gesler, I expect you and the SEC to take a leading role in getting this done. Thank you.
By expressing my concern with the SEC's posture towards cryptocurrency and blockchain. Keyword here is innovation. As I've said before, I believe a lighter touch regulatory approach is what's called for here, and that over-regulating this young and emerging industry could drive jobs, innovation overseas in the global race, which we should all agree on would be a very bad outcome. America has long led the world in innovation, and we must do our very best to ensure that the conditions continue to exist for America to lead in this space, and especially in the crypto sector. Chair Gesler, you have on multiple occasions asked crypto companies to come in and speak with you. However, many of these companies that have come to speak with you have soon after found themselves the target of enforcement actions or even legal threats. Question is, what's the process for the SEC to provide guidance, and what might companies expect from talking directly with you?
I thank you. I want to say, I think the way we innovate is within public policy frameworks. But we have asked companies to come in, talk to us. If they're trading or lending a security, there's a registration regime. And companies since the 1930s on for 90 years have found ways to innovate but register or seek an exemption or seek a no action letter and work with us to ensure that they're registered, but there's a public policy framework around that.
So you're drawing lines, I think, through public statements without actually going through an APA process. What kind of responsibility do you have to provide clarity to market participants as opposed to really chilling the marketplace through some of these vague speeches, vague remarks, vague interviews?
So I, with all respect, I think that actually the SEC has the authorities that Congress granted to, and it's a very broad definition of security. It includes investment contract, includes note, includes 35 other things. My predecessors put out various guidance, Chair Clayton and so forth put out guidance in this area as well. And so I think come in, talk to us, not you, Senator, but the entrepreneur, and work within an investor protection regime that also facilitates capital formation. I fear if it stays outside this field that I studied for 3.5 years at MIT, I have a belief that this has been a catalyst for change. But I think if it stays outside of the public policy framework for anti-money laundering, tax compliance, investor protection, it's not.
The SEC sufficiently equipped, whether by regulation or funding, to appropriately ensure compliance and keep pace in the cryptocurrency market? Do you believe so? And if you don't, then what would we be doing in the committee? What do we need to know to help you with?
I think you've raised both points. I think funding-wise, we could use a lot more people. I just have to be frank with you. I mean, there's 6,000 projects, and while some of those are commodities, many of them are securities under the laws, and many of the platforms are. So we could use some more funding. In terms of legislation, I think what I've said earlier in this hearing is the coordination between the market regulators is strong, and Chair Benham and I have been talking through how to do this, but there may be things that Congress can weigh in and help on the coordination, and also around stable coins, the coordination with the banking regulators. And then there are some things, frankly, a bit in the weeds about transfer agents and custody and the like.
Welcome to the Crypto Teacher. And guys, I come back with that video just to make you think. And this video gives you a true example of the Hegelian dialectic. This is the way the New World Order moves in whatever objectives that they're doing. And we know cryptocurrency is one of them. And that's all you hear about cryptocurrencies is the negative, which we know Gary Gensler himself knows how powerful blockchain and cryptos is. The whole banking committee that's in this video knows about the fourth industrial revolution. Like Jerome said, we're no longer going to be in this economy. We're going to the new digital economy. Robots, algorithms, drones. But we know the New World Order works off problem, reaction, solution. And they've already created several problems. The C word, hacking, climate change, mass unemployment, evictions. So guys, they have plenty of narratives they can play with. And then they're going to run in with the solution. And we know there's programmable money. But China next year is going to start. We know regulation ISO is next year. Because we know when it comes to the New World Order, it's all planned out. You have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends. So therefore, we can start the re-education now. Because as we see, the fourth industrial revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.